Morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, August 6th. And we had a pretty wild 2 days at the end of the week with Bernanke speaking, ECB announcement, Draghi really not really coming to the table. And then, of course, our non-farm payrolls come out. And if you can look in front right here, you'll see the charts are pretty benign first part of the week. And then we had a little drop, then a sideways consolidation, then of course the big gap up on Friday because of the non-farm payrolls, which always really kills most of the trades for the day because most of it has been exhausted and usually just stay in that area and kind of grind sideways all day, and you could see that right here, right in this area. So we really had a pretty benign week, other than of course that little Thursday and that blip up on Friday. And if you came in long, that's another story. But again, being long or short overnight, holding stocks. A little risky game right now. As you can see, that markets are totally news-driven, and they do trump the charts. So we want to kind of navigate through that in the most cautious way, so to speak. And let's take a quick recap of the week. We saw really at the end of the week final numbers, fractional gains in the S&P, Nasdaq, Dow Jones. They did go a little bit higher, but gains were really not impressive at all. We did see. Friday, Russell continues to lag a lot of these indices. Russell dropped about just under 1%. July unemployment reports came out. As you know, ADP had a better report, so did non-farm payrolls. There's a consensus on the street that these numbers are skewed, but nonetheless, we as traders have to navigate around these reports. And most of last week's economic numbers really weren't that bad. They weren't bad at all. The only thing that really came out negative was June factory orders, which fell 0.5%, while they were looking for a 0.6%, 0.6%, rise. So again, numbers weren't that bad. Earnings as well are starting to wind down. Economic news is going to be a little bit light this week, but there'll be always something to trade around and trade off of. Now, if we talk about technicals real quick, and then I will get right into the charts. We continue to see these market divergences, and a lot of these sectors are really at support or resistance. Semiconductors, financials, doing well, but at resistance. Composite as well. Russell and the copper are lagging. Shanghai, as you know, I always like to look at the Shanghai index, although it looks like it's bottoming process, which is also a very good sign for a continued rally. We do want to see, market strength picking up coming into early fall. And then we usually get a little bit of a blip sometime September, October, and then we rally right into the new year. And that's what we like to continue to see without any kind of major cracks developing. So if we can stay in this area here, maybe drift lower down, give or take 100 S&P points and keep in that 1,300 area, I think you could definitely see 1422, which would be the high in the S&P, or even 1,500 or higher, actually, come in the end of the month, if the market can stay and just kind of navigate in this area here. But nonetheless, with copper, Russell at lows, Shanghai at lows, it's really disturbing to see, if you're a bull, where this market is headed. So can we probe higher? I definitely see the market has a little bit of upside, but I think the upside is limited until we get another decent-sized pullback, then digest where we go, and then hopefully rally into the new year. Now, as you know, seasonal time of the year, this week coming, and into really all of August is relatively weak, with end of August kind of picking up momentum to the upside. They usually kind of end of that summer rally they usually portray. So seasonal tendencies are really not with the bulls at the moment, but that could, again, always change. So we want to kind of keep an eye on the overall perspective, the depth of the market, okay? And then we can move in from there. So even though we have a lot of uncertainty in the markets, there are trading opportunities. That's why we don't want to really get caught and chopped around here. We want to pick our points, pick our setups, the best possible setups that really stand out, work those trades, and really kind of get the best possible gains. It is the summer, so the summer is going to be relatively quiet, lack of momentum, right? Lack of interest. Although it hasn't been that bad, August so far hasn't been that bad, but July, and we're getting right now into the dead of summer. Everybody takes off for the summer with their families the last 2-3 weeks to get in their vacations. So you just got to realize that and not expect too much, But again, there's always opportunity. If you're not there in front of the screen, you're not going to be able to capitalize on these moves that come out during the course of the day. Okay, so I do see some upside possible, but I do think it's limited until we get a decent size sell-off, at least a pullback or retracement to unwind some of this overboughtness. Okay, so speaking of that, let's go right into the indicators and the charts. Bar chart momentum indicator way overbought, as you can see here. So I do expect some sort of at least a pullback or at least a consolidation in the coming days. At least either today, maybe we start off strong and then we start to fade a little bit. So yes, I do see this. This is a very trusty indicator, and I do see this market looking for a pullback sometime in the next couple of days. Now the NYMO really isn't given much, but as you can see here, the NYMO is clearly overbought at all. However, there's plenty of room to the downside, and that's really what we look at, right? We look at overbought, oversold. Where are we? It's basically neutral here, 4.38. So it really isn't telling us much, but that doesn't mean that we can't go lower. Now let's take a look at our NASI weekly. As you know, this portrayed a big sell signal here about 3 weeks ago, and on the Nasdaq now, this is the Nasdaq summation index, okay, the 5/3 stochastics. So if you just shorted that on the Nasdaq itself, like short the Qs, you'd be in the money right now. So the Nasdaq has a sell signal in this indicator here. Okay, so that's something that we want to really pay attention to closely, because obviously tech is important. Now take a look at our VIX. We did break out of that bullish falling wedge. Now we're coming back to back test the lower trend line of this wedge. Now to really get going on the VIX, I would like to see this thing break below the moving the Bollinger Bands. We have some decent support up in this area. Break back inside the band, and that would give you a little bit of a buy signal on the VIX, which would give you a sell signal in the market. So let's keep an eye on what the VIX. But again, guys, relatively slow. I know it's a doldrums of the summer, so I wouldn't expect too much. 2-3 good trades get you paid for the day. All right, daily chart of the U.S. dollar. Now I want to show you the weekly chart. Now we did have this big engulfing red candle, took back the 2 previous days. Now we're back below the 50-day moving average. So if you're a bull in the market, this is a good sign that you'd want to see dollar weakness, right? So we bounced back below the 20. Looks like it's starting to roll back over again, and our ratio U.S. dollar S&P is headed lower. So this is a good sign of what you want to see. Now if we go for the weekly chart, you'll see the weekly is holding this area of this pivotal high in this area and chopping back around again. But again, a break above this area, you're going to have a beeline right to the 88, 88.5 here. And if we did a volume profile, which I don't have on the stock charts, you'll see that it's really light, thin zone. So this market can really, this dollar can really move higher. And again, you're going to need a catalyst. You're going to need some sort of an event to really push these things higher, push the dollar higher to really get into that safe haven status again. Otherwise, you just see the dollar will probably fade back down in here, which will definitely keep a bit in the markets. Okay. Now, last, and then we'll go into our sectors. Is I want to just show you, like I've done the last couple of weeks, but I want to catch up to this. Look at the difference, banks and the S&P making higher highs, and the banks here, banking index, the BKX, is actually hanging up in this area here. Top, and again, can't break through. Now, that doesn't mean that it can't break through this week, but I want to just show you where we are here. Definitely has improved, so we're at resistance right now. Do we roll? So this is really something to take a look at. But if you look at clearly defined higher highs, higher lows, and this has really been in a channel since July. So this is something that really concerns me. Semiconductors started acting pretty well, right? Did a little bit better than they faded all the way down to the 345 area, and then we picked up steam, and now we're basically at this area of resistance as well. So this market's at a conflection point that either we're going to run higher or we're going to roll in these areas, and then the market start to sell off a little bit. Okay, let's take a look at copper. Copper, very disturbing. This is something that's very disturbing, as I mentioned many weeks. That copper really leads the S&P. Now, does things change? Of course. But this is a little too soon for me. I'd like to really see copper start to break out of this little downtrend area, this upper end of resistance, and then at least to get up to this double top and break out. And I think that will happen. I just don't think it's going to happen right, in August. And again, things can change. We let the markets, we let the charts tell us what to do. And right now, this is concerning. Transportation sector as well, very concerning. Yeah, it did have a great recovery day on Friday, but this is still concerning. Lower highs, lower lows, higher highs, higher lows in the S&P. We don't want S&P to lead. We want transportation, the Russell to lead, and that's kind of concerning to me. Again, we still have this market divergence, so we want to continue to monitor this. And if they start to pick up steam and they start to take control and lead the rest of the markets, then I could say, hey, then we can really get into some swing trades. But as of right now, I really kind of stay away from the swing trading. Okay, upper end here, this dotted dash line. We're getting to that point, which is 1397, 1400 area. All right, we're at the upper end of this rising wedge. So we took back 1 day. We took back 4 days of down days. So, yeah, pretty impressive. I do think it's impressive, but I don't think I don't think it's. We need more than that to really say, hey, we got a full-fledged, bull market or running higher. Okay. IWMs. Basically, in this range, we broke below that lower trend line of the symmetrical triangle, big, large symmetrical triangle since June, from the June 4th lows, and we just cannot break this lower trend line. Now, if we keep touching at it, eventually it is going to break. So we want to see this start to pick up a little steam. Okay, transportation sector, as you know, I put this label as head and shoulders pattern, bearish pattern. It's only valid when we break the lower trend line, which would be the neckline, right? So this pattern can invalidate itself by breaking out of this larger symmetrical triangle, which we have a symmetrical triangle, and then we have this head and shoulders bearish pattern. So which way is it going to break? We don't know until actually it tells us which way to break. And then from there, we can react accordingly. Okay, last chart, guys, Qs. Big cap tech, very impressive. I do like the volume. Volume came in higher on both days. So this is where I like to look at the ETFs because it gives you a good volume indication. A little bit overbought in the stochastics, but that could stay overbought and we can continue to run higher. Here we got a little bit of we got a little gap area here, which is profiles or volume profiles, thin area. So this could definitely run up to the 68, even 67 area. So something to keep an eye on. But then again, a good sign of big cap tech starting to pick up momentum. All right, so let's really see how this week goes. We do have light economic data coming this week. Earnings are starting to unwind, as I mentioned. So let's just be on our toes here. It is a doldrums of the summer. I wouldn't expect too much, but look, if we can get 3, 4, 5 trades out a week and get paid for the week, that's a great sign. And then we just don't want to get in trouble if the market does decide to sell off. I mean, really anything can happen. We're kind of lofty at these levels. So I wouldn't, we get one little catalyst, downside catalyst, and I think people start taking profits going into the end of the third quarter. Okay, all right, guys, we'll talk to you tomorrow. Have a great day today, and see you then. Take care.